Welcome to Elementary. Well, today I wanted to jump on and do a quick show. Looks like my camera is dirty, but I don't know. We'll see. Anyhow, probably not. Maybe it's just the lights. I don't know. I think I have too many lights on. Thank you for joining. Anyhow, I wanted to do a quick show and I wanted to talk about why downsizing in today's market can be tricky. But I also wanted to talk about if you're thinking of buying and you decide, hey, I want to add someone to my property, I want to give you some insights as to what to consider. So, of course, step one before you even think of downsizing is, and if you have any questions, for those of you watching, if you have any questions, feel free to drop it in the comments below, or in the question section below. And, we can go from there. I don't know if that's better because I have too many lights on. So, if you're considering downsizing, there are a few questions to ask because you're not just looking at possibly, I don't have enough light, I think. So you're not looking at just, should I just downsize? Like you're in a different space, right? You're just not, maybe your kids have left and you're thinking, hey, it's a good time for me to find a different space. It doesn't have to be a smaller space. It could be a lateral move, but a different style of home. It could be a lateral move with a different features that you probably want in a home. I have clients all the time who are, who tell me, well, the kids have moved, and when they first moved into the home, there was budget constraints. They had to fit all these kids into a home, and therefore they chose this home. But as they grow and the kids grow and the kids move out, or never move out, who knows these days, their needs change. And when their needs change, they definitely have to consider a little bit more of, what should I be doing? And so what I say to people is ask questions like, what does downsizing mean to you? And it's such a great question. And it doesn't have to be about less space, or it also could be embracing a fresh start, right? But what does it mean to you? Why do you want to downsize? And then, do you want to stay in your community or do you want to move further out? Because sometimes people want to stay close to family. I have actually a few clients who have strategically purchased a home. So the mother lives on the street. The daughter says, I absolutely want to live on the street because, babysitting becomes a whole lot easier when mommy is down the street and you can just have the kids walk over to grandma's, right? Anyhow, and what are some non-negotiables that you absolutely must have in this new house? If you're taking the time to downsize or right size, so to speak, what are the must-haves for you so that you absolutely, cover all those? And not everyone really thinks about all these questions. So when I show up, sometimes these are deep questions, right? Like you can't uncover them in 5 minutes, but it's really something that I set people up in advance to say, think about this, wrap your mind around it. And even if you just kind of put down bullet points, it helps me kind of understand where you're going. And then number 2 is timing is key. And I know that it's almost impossible to time the market. It's like gambling, right? Like, if you time the market and you come out on top and you do all of those things and the market just plays in your favor, great. But people always ask me, should I buy first, sell first? And that's a big question. So in a market which is so fluctuating, normally people will be more open to actually selling first before they buy. Because they want to make sure that they can sell, especially if they need the funds from that home. But the other part to it is that a lot of people also don't want to sell what they have because they feel like they only want to sell what they have if they can find the right home. So it's kind of a question that we have to navigate strategically. You have to run your numbers. You have to know exactly what you owe, how much of a mortgage, where you want to be, and what's going to make it work for you. So then number 3 is, what do you mean by downsizing? Is it right sizing? Is it finding a condo that's easy maintenance? Or is it moving to a smaller home? Or is it moving to maybe a home that's the same size but a different style? Or maybe a home that's a little bigger but a different style? And is it a bungalow that you prefer? And how much of a yard do you want? Do you want stairs? And do you want to be in a community like an adult community? So those are things for you to kind of be mindful about. And of course, working with someone that can truly have the patience to work with you, kind of help you work through all of these little kinks that you have, like these thoughts that you have. But the next one is like the process of downsizing. Sometimes people, it's a financial choice, right? People want to go smaller because they want to eliminate a mortgage. They want to start planning for, they want to, think about retirement. They want to start thinking about traveling more, doing things that they absolutely love, and they may have a mortgage. Sometimes people around this age group don't have a mortgage, and so that's all good. Like, you can probably do a whole lot depending on what you want to do. So that was one thing. But as I progressed through helping, one of the topics that keep coming up is with the market that we're in, it's a tough market, right? And so I want to talk about what it means to add someone to a mortgage. And I am not a mortgage broker. I am not a financial planner. So I don't want you to really think I'm giving you advice, but I want you to turn your mind. I'm asking the questions so that you can ask these questions in return when you're working through some of these challenges. So like I said, for any of you who have any questions, drop them in the comments below, and we'll get to them. So why did you want to add someone to your mortgage? Sometimes it's financial, like it's people think, hey, I'm just gonna have someone co-sign for me, or I'm gonna have my parents come on my mortgage with me. But it's also a shared financial responsibility, right? Like, so if you are signing for someone, you have to understand that piece as well. And sometimes it's because, they feel like, hey, if I have somebody else who's stronger, it would be a better financial approval. I might get more money. And a lot of times, parents want to help, family wants to help because they want to be able to support their kids qualify for their first home, right? But these are some things for you to turn your mind to and to actually think about how you manage this. I'm not saying don't get someone to, all I'm saying is manage it so that you know. So what are some pros? So of course, you can get some increased borrowing power. Now there's a con to that as well. And then there's a shared financial burden. And that I'm listing it as a pro, but it could be that maybe you and a spouse, or you and a partner, or you and a joint, like a friend, want to buy a house together. And so that would be, everything would be split in half, that kind of stuff. But it also boosts credit. So if one party has a better credit rating than the other, and everything being equal, and them paying out all of the things that they pay out every month, and they might also improve their credit with just doing this, right? But what are some cons of adding people to your mortgage? So of course, it's a shared liability piece. So if somebody defaults and doesn't pay. So let's say you sign for a friend and the friend is living in the house and you just want to, I don't think you would sign for a friend, but whatever. I'm just giving you an example. There's that shared liability piece that you're on the hook too if they default, right? And it could mess up your credit and you have to pay for it. And so those are things, complication in a life event. So how do you remove someone's name? So let's say you have a breakup or a disagreement or financial hardship. How do you then remove someone's name? And I'll give you an example for this particular piece. Like, someone's like, okay, well, if there's a breakup, there's rules around it. Yes, absolutely. But let me just give you an example. So for example, let's say you and a friend decide you want to buy a property together. You come up with some ways that you're going to put your efforts into it. But then they have a challenge, right? And they want out or they stop paying. Like, how do you deal with that? That's not the time to deal with it. You have to deal with it ahead of getting into that situation. That's all I'm saying. And there could be a legal issue. Like, what if someone dies or passes away, and the surviving borrower might face complications? It could be estate complication, depending on what it is, right? There could be estate complications. It could be a part of the shared portion of the property become part of the estate. So let's say it's a family member and the family member passes away. And let's say they only have like 1 or 2 or 3% or 5% or 10% in your property. Not a shared amount, right? But what if that portion now becomes part of the estate? How do you manage that? Because that costs money. It all costs money. Everybody's got the hand out for money. So, and then of course, if someone doesn't pay, like I said, there's an impact on credit, right? So coming back to what if someone passes away? So for example, in Canada, estate laws apply. The shared property is then passed into the beneficiary of the estate, depending on who it is. So this is one of the things, I ask people, joint tenancy or tenants in common. And when you're excited about buying a house, how many of you up here know what you have? Like, do you have a joint tenancy or do you have a tenancy in common? And so a lot of times, this is something you would do like at the lawyer's office, right? When you're signing off, this is how they set you up. So joint tenancy is the surviving owner automatically inherits the deceased share. So for example, husband and wife, you could set it up that way. But you can also set it up as tenants in common where, just because you pass away, maybe you have like kids from a previous marriage, kids from this marriage, kids, like, I don't know. And so you set it up a little differently where, not everything goes to the surviving spouse or the common law spouse. Maybe part of it goes to them and part of it goes to whoever. It all depends on how it's set up. So what do you have? Do you have a joint tenancy or do you have tenants in common on your documents? So that's some homework for you. And then what happens to the outstanding mortgage? Well, then comes the question of what happens if you want to remove a name. And so there's a couple of things. If there's a mortgage owing, you have to be able to, I have mortgage brokers on here and they can probably give me the answer. But the lender has to approve some of that because they have to come after the person should you fail to pay, right? And it could be also a little costly if you were to having to refinance or you had to pay some legal fees, appraisal costs, all of that, or any penalties as well. So those are some of the things that you need to be thoughtful of when you're doing this. Now, what are some liabilities? Of course, a shared debt is a liability, and you need to turn your mind to that. Credit risk, if the person doesn't pay. Legal risk, if you have disputes in ownership. A lot of times we'll say to people, get an agreement into place. So for example, if you bought a home with, let's say 3 friends bought a home, and perhaps you're living in it, perhaps you're renting it out, I don't know, perhaps whatever your what then happens if there's a dispute or one person now has a change of heart? Do you have an exit plan? Do you have an exit plan that you've thought about in advance so that you can make sure that you're not stuck, that you have a plan B or a C, and that you're not stuck in case one of these parties want to exit and you're not ready to? And have you done the cost associated with that, and who pays what if they choose to break this in advance of the 5-year term or the lease, the mortgage term, right? I'm not saying 5, it could be 3, it could be 5, it could be whatever. A lot of times people think, hey, that's not going to happen to me. But I'll give you an example. Say you're 3 young people, you went to university together, you kind of shared a home, you're okay with sharing a home. But now, as you get older, each of you have partners, and now you want to start a different life. You want to get married, you want to have your own home, you want to have kids, and it starts getting complicated, and you no longer can live in that home because you're sharing that home. And what do you do then? Do you find somebody else that the other roommates or will be okay with you subleasing to them, or renting your portion to them? It's quite complicated, right? But I'm not here to complicate and muddy the waters. All I'm here to do is have you turn your mind towards all these things, so you're thinking of them in advance and you're not having to deal with them when it happens. Because I know people get so excited. Buying a home is so it's exciting. It's quite daunting, but it's also quite exciting. And people get so excited once they see that home, and it's an emotional journey for sure. But once they see this home and they get so into it, they totally forget all these little things. So I wanted to talk about it today and say, these are important things for you to really ask and consider before you go down that path, before you get drawn into the sale of the home and you haven't thought about all of these plans. So if you're going to share, I would suggest you get a co-ownership agreement so everyone knows what's your exit plan. What does someone have to do in order to exit? How soon can they exit? What term must they fulfill before they exit? And all of those things, get a lawyer to help you out. If you have an agreement such as that where, a number of friends are getting together, I would suggest pay a little extra, split the cost, and get a lawyer to put a document where all of you are part and parcel of that. Because let me tell you, your friendship is not worth risking this financial, money is a funny thing. Let's be honest. Money is a really funny thing, and it can really go in different directions. And all I would say to you is it's not worth risking a friendship because you've got some money woes, right? But it's very serious woes, right? Because it's not just anything, it's a contract. And so pay a little extra. If this is a business you're doing, if this is a business where all 3 of you getting together and you're finding a home that you can live with and finding ways that you can make it work for you, then you need to have a little more thought put into it and make it, it's a difficult conversation. And if you can't have that difficult conversation, you're probably going down the wrong path, right? Difficult conversations are hard, but they need to happen. And I would say a good lawyer will really kind of get you on top of this. They probably have this, they do this for all these people. They just tweak something that they have and make it work for you once you know what you want out of this. And it has to be a mutual want for everyone, right? It has to work out for all of you in the long run. After all, this is a financial undertaking that you're doing together. So those are the two topics I wanted to cover. I wanted to touch base on that, just kind of give people some insight, because a lot of times, especially the pieces when people pass away. I know I sound so morbid talking about death, but it is a reality. And I don't know, is it because I'm getting older? I'm thinking of all these things. But it's really important for you to really take a greater look into this. If you don't have a will, that's a whole different story for a different day. But even if you have like a basic will and you have a trustee and you have, someone you're leaving your stuff to, and you have it doesn't have to be fancy. It just has to be put in order so that people know what to do if you were to die. People know what sort of celebration to give you when you die. I have this thing about my celebration of life. And I say, if you're not here celebrating with me while I'm alive, don't bother coming when I'm dead, because, that's the way I feel, right? I feel like if you can't take time out of your day to hang out with me while I'm still here, why bother when I'm gone, right? That's my way of looking at it. But other people might have a different way of looking at a celebration of life. And they may want to, have this big shindig. And that's okay too. So thank you for the love, and thank you for spending your time with me. Mortgages by Elio, good to see you. And CT Mortgages, good to see you too. And everyone else who joined, thank you so much. I'm not sure if you're ready for the holidays. Clearly, I'm very unorganized this year. And but the good part about it is, if you're a last minute shopper or you're being a little unorganized this year, you get a holiday break from the HST. So there you go. You can save a few bucks on video games, of course, and handhelds, and of course some groceries. But so that's it for me today. And until next time, we'll see you soon. You're welcome. Have a good evening. Bye.